So we know that buying and selling fuels the markets. Speed of moves, size of moves, duration of moves all tell the story of the relationship between buying and selling that's taking place. The speed at which the market transacts business influences price movement, as we've seen. We know this. We see that when price is moving really, really slowly, the natural reaction is to think that the move is over. When the market's moving really, really quickly, we're enticed to act. It's a bit like moths to a naked flame. The using up of buying and selling fuel tends to be a tricky concept, so I'm going to break it down and move through some examples. So let's assume we've already deduced the market skew is down. Now, because traders fight the directional skew, and therefore fueling its continuation, we want to be a seller. Everyone agrees with that. So before we enter our sell position, we want to see evidence of what? Prior to entering our short, we want to see evidence of buying taking place, because those buyers will fuel the continuation of the move down. All right, so here we've got a couple of examples of markets going down overall. So both of these examples, left and right, there's a directional skew to the downside. But recently buyers have stepped in because, well, prices moved up. We can see that. So if I was to give you a choice between the left or the right sell trade, which one would you take? And I'll give you a clue. It's the one which has the most buyers in the market as of right now. All right, so has everyone picked either the left or the right? So let's have a look at this on the left-hand side. We can see buyers have come in, but then some selling's taken place. Then some buying's come in, selling, buying, selling, buying, selling. And then we look at the right-hand side. By contrast, it's buying, 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 buying all the way up. So out of those two versions, which one has got more potential trapped fuel to continue the move to the downside? So the answer is the right-hand side. Does everyone understand that now? All right, here is something different. Would this be a sell? And if so, why? I'll also give you a clue. We actually went over this a few slides ago. Now, why are you having a think about that? I'll just mention that I know there's questions and things coming in, but what I'll do is just if you can save them, and I'll go through those at the end, because I'm sure that one or two questions will be perhaps answered along the way, and also others will probably have similar questions as well. All right, so in this scenario, we've already discussed this. We've got price been moving down overall to the downside, and then it's no longer going down. So this is a classic sell because of the amount of time that's passed in which buyers are enticed to enter. Now, I call this the bread and butter trade. If you're familiar with the term, you know, what's the bread and butter in your business, etc. This is the stock standard trade that, whether it be to the upside or the downside, that I focus on the majority of my profits.